You're listening to the All-Star Charts podcast with JC Peretz on TechnicalAnalysisRadio.com.
All right, everybody, we are back, and this week we have Eddy Elfenbein, who, as I was just joking, needs no introduction. Eddy of Crossing Wall Street, thanks for being here.
Thanks for having me.
So, I mean, Eddy, you're OG, man. You know, when I think back at financial bloggers, are you number one? Who's around longer, you or Ritholtz?
Oh, Ritholtz.
Really? Not by much, though.
Not by much.
So, I mean, you know,
he was one of the first I read, and that kind of prompted me to get on. So I joined in mid-2005. I think he had been on for maybe a year or so, but there weren't many people, but a lot of people joined not soon after. Even in fact, when I started, you know, the Wall Street Journal and Barron's and Financial Times, they didn't have blogs or, you know, any sort of interactive. But they all started doing that not too long after. So, yeah, I guess I was among the first crowd to join.
Eddy, for sure. Kudos to you. 14 years of blogging. I mean, I remember, you know, way back when people were like, what are blogs? I mean, you read that stuff? I mean, and now if you're not reading blogs, regardless of whether you're in finance or not, I mean, if you're into women's shoes or, you know, whatever it is that you're into, architecture, engineering, or as Phil Proman said, building bridges, you know, there's a blog for everything and really, really good information out there. We're very fortunate as market participants to have just an unlimited amount of resources to just go and see what smart people are saying about all sorts of different things. I mean, before financial blogs and before Twitter and StockTwits and this whole network, I mean, man, it must have been really difficult for market participants. I mean, maybe outside of New York City or Chicago, maybe to really learn what the market is about. And I guess I can't really be surprised by all of the confusion out there historically, but I think people are getting a lot more education. People are much more aware of what's happening with that, with the new communication? Or do you think, Eddy, that it's maybe overwhelming and people are more confused than ever? Which way do you think it's going?
Well, I think both, to some extent. I mean, the information is astounding, what you have. And the thing is, the crowd is always smarter than the individual. So you talk about like any subject. I found this through blogging or tweeting, and you'll mention something, and then somebody will say, you know, well, I was actually on the development team for that product. You're like, oh, okay, well, this guy, you know, knows what they're talking about. You're always going to get that. Somebody will know more, and hopefully, you know, you can learn from them. But I do feel, as your second point, I feel that there's this excess of information and a dearth of news. We have all these bits, all these ones and zeros flooding at us, but we don't know what to make of it. And I think that's a problem that investors have right now. I think it's a problem with the media right now. And people just don't know exactly what to go forward. And I think people are susceptible to sometimes some shady characters who bend the news or what they want to be the news in their direction. So the simple answer is I think it's both. That's the kind of world we live in today.
So rewind 14 years ago, and what? You're reading Ritholtz, and you're like, hey, I could do that, and you start Crossing Wall Street?
Barry can do that. Anybody could do that. Yeah, I got into, I read a lot of the blogs. It seemed like they grew up after 9/11, and there were a lot of, you know, talented bloggers and writers, and I was sort of influenced by that, and I thought it was interesting that it really had not entered the finance space, and I thought that was be a great opportunity. I like to write, and I enjoy sharing my thoughts, and I thought that was a good avenue to sort of get this up and writing about finance. I'm not terribly interested in writing about politics or my feelings or thoughts on anything, and I wanted to get basically into finance, into investments, and discuss it in a serious way. And I was lucky that there was an audience out there. I remember early on, I went into what I'll just call a financial news network. And this was, you know, they invited bloggers on, and the anchor asked me, so what are your bloggers saying? And she didn't understand what blogs were. She thought like the reader was some like group activity, and they had bloggers. She was like, what are your blog? And I want to say, I'm ready for a high level discussion of the stock market. And she thought it was like, I remember my mom, she's like, do they think it's like a chat room or something? They had absolutely no idea. I mean, it was just a very surreal experience. I remember that was my first time being on television. But what's also great about just the connected world is that even if you put up something and it's not right, it can you get feedback, and then other people chime in. So it's sort of like a continuous network. That's really what the internet is about. People always say, "Well, are you worried about somebody's dumb opinion?" And the answer is no, because what it really is, it's the network of people. It's the feedback loop, and it's constant, and it's 24/7. And it really is amazing how it's changed investing for institutional people and also for individuals, the mom and dad investor, how people go about investing and planning for their retirement. I love being a part of it.
And you know what's cool, Eddie? My favorite thing I always say about it, yeah, it's great. We get to learn from one another and everything like that. But what's cool is that ultimately, you get together with each other, whether it's in New York City or at a conference somewhere in Arizona or Florida or Vegas. Eventually it all comes back. It's like, oh, you are so and so. And I remember meeting somebody for the first time. I'll leave his name out of it, and his avatar was Old Dirty Bastard of Wu-Tang Clan. So I always imagined him looking something like that, right? Because you just see an avatar. And then I met him in San Diego, and he's like this short, white dude, and it's like, whoa, you're Spider Crusher, and it's just funny, like you ultimately meet these personalities in real life, and it's like, oh, cool, I really appreciate your work. And you meet other people that you didn't even know read your stuff, and they're like, hey, I really, and it's like, really, you read my stuff? Cool. So I always found that to be the most valuable thing. And then once you know one another, then your network sort of, gets stronger, and it goes from there. So I think that's really, really cool. So, all right, Eddie. So now fast forward. I mean, you've had Crossing Wall Street forever. You always used to do a sort of like a portfolio, just a year-long portfolio, and you have a tremendous track record. So you recently launched an ETF, an exchange-traded fund. You want to tell me about what it was on the blog and now what it is as an actual traded vehicle?
Yeah, it's a real live thing. So what I did was, I wrote about investments, and that's sort of what I wanted to do. And you get lots of questions about, should I do this? Should I do that? And I guess the big thing is that people are always concerned about trading in and out of stock. So what my goal was, I wanted to say, look, you don't have to do a lot of trading. I'm just talking about, being a good investor. There's lots of strategies. I'm just talking about being an acceptable, successful investor. I said, this is what you can do. At the beginning of the year, I'm going to choose 20 stocks, and I'm going to show you, I'm not going to make any changes during the entire year. We're just going to set and forget these 20 stocks through the entire year. This was for 2006. And we're going to see how well we do at the end of the year. It was sort of like a dare to myself and to show people that we could do well. And we did this, and the portfolio was doing well. And so at the end of each year, I swapped in and out 5 stocks. So I sold off 5 stocks. I added. Then I did it again on January 1st. Those 20 stocks, couldn't make any changes throughout the entire year. And we've done this every year. We're doing it again. So this is our 14th year doing it, and it's had a pretty good success over the years. So then I got more and more questions saying, well, do you manage money? And I say, well, no. And it's like, well, do you have a hedge fund that people say, I love the buy list. I think it's great. How can I invest in it? And I kept saying no. And then, after you get a number of questions, people asking, hey, can I invest in this? I think, hey, maybe we should think about making a product that actually does invest in this. So I partnered up with the folks at Advisor Shares. They're based not far from me. I really like the team they have there, and they love the idea, and they love the idea of just bringing this product to market. So we did in September of 2016. We launched the buy list as an ETF. So it's called, the official name is the Advisor Shares Focus Equity ETF. That's why it's focus. It's just a limited number of stocks. We had to make
Ticker
one
symbol,
little change.
right? The
What's
ticker
that?
symbol
Yeah,
CWS.
that's right. So it's
Clever,
Crossing Wall
clever.
Street is the blog, and I've never done this before, is choose a ticker symbol. That was an odd experience for me. I tried to go through the entire alphabet, and I found, fortunately, that CWS was open. And, if the Chicago White Sox, if they want to make me an offer, if they go public, I'm totally open. I can be sold.
Nice hedge.
So yeah, and the only change we had to make, we started doing it was 20 stocks. I had to expand it to 25 just so to meet the diversification requirements. So not a major change, but that's what we did. And so we just celebrated our 2.5 birthday like 2 weeks ago, and so many little funds don't make it. And we're still going after the end of 2.5 years. We're small, but we're successful, and we're rebounding from the market's plunge in December. So we IPO'd at 25. I think we're right around 33 today. It's going well. Can I also say another thing is we're also a pioneer in the ETF space in that it's called a fulcrum fee. I'm sure some listeners may be aware of this in the traditional mutual fund space. Basically, it says that I have my skin in the game. So the fee of the fund is dependent on how well we do versus the rest of the market. We use the S&P 500 total return. So basically, if the fund falls short of the market, if we underperform, you get a little savings on your fee. But if we do better than the market, then me, the fund manager, I get a little bonus. So we were of the thousands of ETFs, we were the very first one to have our fulcrum fee.
Eddy, you're just a pioneer. I mean, across the board, you were one of the first financial bloggers. Now you're breaking down barriers in the ETF world, and I'm a firm believer that what you're doing is, going to be in some sort of way part of the future, right? I mean, it just seems like, that's where we're headed as a society in terms of fees, in terms of structure, in terms of incentive. Let me ask you this, not to dive too deep into the mechanics of the whole ETF world, but how far do you think we're away from a much larger percentage of absolute performance, sort of almost like a hedge fund structure within an ETF? You think that's never going to happen? You think that's somewhere on the horizon?
Yeah, I think it's definitely possible to have that on the horizon. I mean, you're just having an absolutely, my feeling is let 1,000 flowers bloom and let people work it out for yourself. If it works, go with it. If it doesn't, go another way. It used to be not that long ago. Take like when George Soros broke the Bank of England. He made $1 billion in one day. Well, that's the kind of investing. The average guy who's saving for retirement, who's buying 100 shares of Procter and Gamble, that kind of investing he was locked out of. It's not like that anymore. You can get the 3x, all these different commodities and currencies through the ETF structure. And I just think it's an unlimited future. I think we're going to see lots of different ways this will break out in the future.
Let me ask you something, Eddy. You're old school, which is a nice way of saying that I'm younger than you are. What have you seen now, outside of the ETF space and everything that you're doing and some of the social aspects that we've discussed, when your career, when you first started on the street and the way things were, what are some of the biggest differences that maybe somebody new to the market wouldn't realize that has changed so dramatically over the last several decades?
Yeah, that's a really good question. I just think of like the overwhelming flow of information, and I guess I would say the centrality and the importance of the individual investor. So much of how investing was done was, for the big institutions, the cult of the research analyst, the cult of the investment banker, and that has been broken down. The barbarians are at the gate. I mean, I remember when I started, working in finance, you had the eighths and quarters and 3/8, and I'm sure lots of listeners will remember that. This was before me, but not too much longer. You used to have fixed commissions. That whole world has been broken down. The superstar analyst, that world has been broken down. You see, sort of the crazy IPOs, which I really don't think were a benefit to a lot of individual investors. That world has gone away. And of course, the ETFs contributing to that the flow of information with news sources going onto the internet. All of these ways have broken out the central connection that ties all these points together is it's benefiting the individual investor. As far as just having with the ETF space, I'll give you a great example is with my ETF, exactly what I own every single day. Where our parents, maybe they would buy Fidelity, Magellan, and once a quarter you would find out what you just didn't even know what your fund manager was owning. Now it's exactly what there's no question about that whatsoever. So it's been all of this has worked for the centrality of the individual investor. I think this has been an excellent time to be an individual investor.
And then, I mean, I couldn't agree more with all of that, Eddie. So where are we going to next? I mean, you and I just off air were joking that I just bought a coin mine. So I'm mining my own cryptocurrencies. I see some of my smart friends buying one. They're not that expensive. And so I said, what the hell? I'll participate. So, is that part of the future cryptocurrency? Is voice, like, should we be more focused on voice? I mean, you're a visionary, clearly, Eddie, with your track record. I mean, where are we going?
Well, the future is you're going to have your own coin. So we're all going to buy JC coin. And
Hell yeah, JC coin. I will be the central bank.
More seriously, I think the big untapped space is the international space. I mean, it's a huge planet out there, and so much of the world is dominated by the U.S. market, and then secondary you have the European and Japanese market, and kind of that's it. Even in the European market, things are so dominated by, you can see the remnants of the British Empire. It's London and Netherlands. There's huge areas that have not been brought in. So the way I'll give you an example. Take like Nokia. Okay, just an example. Well, okay, that's a Finnish company, right? So when the board of directors once a quarter they fly in to Helsinki to have their meeting, do you think they're speaking Finnish? They're not. They're speaking English, and that's sort of the international language of finance. And I think a lot of this has blinded us to the huge opportunities that we can see in China, in South America. How this will happen, I don't know. But why can't someone saving for their retirement in Sao Paulo, why can't they buy XLS or the CWS? Why can't they buy firms traded on the London Exchange? Why can't this be done smoothly and instantaneously? I think that's the next avenue for development within the financial space. I think there's just too much money to be left on the table. And there's too many pointless regulations in the way. So I think in the future, how this will happen, I don't exactly know. But I think the bringing together of a single global market is what we're going to see.
I'm seeing it, Eddie. I'm seeing it every day. It's really unbelievable. I'm very, very fortunate that over the last several years, I've had the opportunity to travel throughout Asia several times and India multiple times. And I mean, I see it. Last week, I was in New York at the CMT symposium where all the technical analysts get together every year, right? You should come next year, by the way. It's freaking awesome. If you want to learn a few things and like talk to smart people, I mean, I highly encourage it. But we had, my boy Lee Zhao from Hong Kong was there. A couple of buddies of mine from Mumbai, Akshay and Vishal. Akshay is at Bloomberg. Vishal is in Reuters. Both of them from Mumbai. They were both there. Jeff Toe, he's in Kuala Lumpur in Malaysia. I've partied with all these guys. Party is probably a strong word, but I've hung out with all of these guys in their various home countries and everything. And it's great to, really see them all there. A ton of guys, Jamie Coots in Singapore, and a lot of people from all over the world, not just in America, Brazilians. There were a couple of guys from Chile and Argentina as well. I mean, just an unbelievable array of diversity, particularly in the technical community. But it goes far beyond that, Eddie. I know you're more fundamentally based. I was in Mumbai and I was at a CFA conference, and there were a ton of people. So I'm seeing it across the technical and fundamental arena all over the world growing. I couldn't agree more. I know you've traveled to like the Philippines and other areas like that. What sort of experiences do you have around the world that makes you so confident that we're growing as a financial community?
Well, yeah, I just think of it as this way: that think of the dichotomy you have is that you can buy like a consumer electronic good, a TV or automobile, and it's assembled. It's an international, work of art. It brings together, some, metal is imported from one country, another metal is imported from another country. You get the leather from somewhere else. Something has been manufactured in one place. So the car is an international effort. But it's like, as far as we turn to money and finance, it's not. And we're very exclusive in certain areas of the world. And so you have an investor from Mumbai or investor from Santiago, and if they want to, go and become a trader or, get involved, they have to leave and they have to go to New York and they have to go to London. And, why can we do it with a car? Why can we do it with a smartphone? We all understand that, but suddenly, we can't do it when it comes with investing. And I've traveled over parts of the world. I've been to the Philippines where there's stock exchange. The average Filipino, they don't invest in the stock market. That's something for the super elite. It's how the United States was in the 19th century. So we got a democratized financial world in the 20th century. It seems like it's just obvious that it's going to happen in large parts of the world. It's a force. I just don't see it stopping anytime soon.
Eddie, you are huge in the Philippines. I don't know if you know this. I think I've told you the story. I'm in Manila. This is a couple of years back, maybe 2.5 years ago or something like that. I'm in Manila, car full of investors on the way to the stock exchange or on the way from the stock exchange. I can't recall. And we're just talking about like financial bloggers, or somehow it came up. And they're like, one of the Nikki Yu, she was like, Eddy Elfenbein? And I'm like, yeah, of course. I've known him for years. She's like, oh my God, he is my favorite. Like, and I'm like, really? And then like everybody in the car was like, yeah, yeah, yeah. Like, you're a big deal over there, Eddie.
Well, I have to explain that a lot of people confuse me with Manny Pacquiao. So that could be what it is. I don't know. I'm just spitballing here.
Oh my God, they love Manny Pacquiao. I got in, I mean, I don't want to say a heated argument, but I was like, this was just after he lost to Mayweather, and I was like, yeah, well, if you don't land any punches, you can't win the fight. And like I was kind of, me, man. I'm just pretty logical when it comes to my analysis. I was like, he didn't land any punches. How could he have possibly won? And they were like, getting upset. Like, they're taking this very personally. All right, so enough about boxing in the Philippines. The reason I invited you to this podcast, obviously, I mean, you and I could do this. We should start our own podcast, Eddie. I like this. No, you're a fundamental guy. I mean, through and through. I mean, you're looking for value. I mean, you're shamelessly just, I mean, that is who you are. Now on the other side of the coin, I mean, I see you posting charts every now and then, like, hey, look at this chart. So I'm just really interested in how a fundamental guy like yourself is visualizing data, which is what we do as technical analysts. We visualize data. So, I mean, I see you doing some of that. I would love for you to explain that to the audience.
Sure. Well, I got to tell you, a lot of the influence, I don't consider myself a technical guy, and I would never advertise myself as one, but I'd say one of the big ways in which my thinking has changed over the years has been a result of you, Jay, and other people writing about charts, and me learning about that, and me looking at the world in a different way. So let me give you a good example. Is that you'll hear people say, and this I just find annoying. Somebody will say, my model shows that the stock market, that the Dow should be at 9,300. And I always think, this is it's pointless. It tells us nothing. And my first reaction is, so when you hear that, we know as a fact that it has a margin of error of like 300% or whatever it is. So they're telling us a model that has no value whatsoever. And the thing about technical analysis is it says we don't worry about the why. That's not important, but we know for a fact we're dealing with reality, and we're dealing with reality on its own terms, not the reality that we're trying to model, not this fictitious reality that exists on a spreadsheet. So should the Dow be at 27,000? I don't know, but it is. That is where it is there. And that's the decision of not one person, but millions of people every day. And they've confirmed that and reconfirmed that and reconfirmed that. And that's what I really admire about what technicians do and chart readers do, is that I always use the phrase, they deal with reality on reality's terms. That mindset is really liberating. And you realize that there's just so much garbage out there. So to you, I have to say thank you, and it has been eye-opening, because the meta narratives, the dramatic theses. Finance is just a death desert for that way of thinking. You are just not going to do well if that's your mindset, and you come up with some crazy model about how the world is supposed to be.
Yeah, like, I mean, how often do you hear, yeah, great, it worked in practice, but does it work in theory?
Right.
Okay, so then talk to me. So then how are you using it? How are you implementing data visualization of any kind into your process to improve or to supplement the work that you're already doing on the fundamental
Right.
side?
Basically, I can't say it's any sort of large methodology, but there are a few things I like to look for with, and I don't think there's necessarily a distinction between. There's a connection between fundamental and technical analysis. I'll give you probably the best example is intermarket analysis. I mean, just look at relative strength of an energy stock and overlay it with the price of oil. Obviously, something, it's going to be closely correlated. And when you see that breakdown, it means something is going on. That's the kind of analysis I find most interesting, and looking for, spaces, investment opportunities. If a stock is consistently outperforming the market and its financials are not, that's going to be a red flag for me. Conversely, if something is underperforming but the market, the financials are holding up well. Also, I like to see stability in the share price as a manifestation of stability in the business. Obviously, you're going to get false positives on that, but it sort of hints. It kind of tells you, okay, this isn't the treasure, but this may be where we can start digging. So that's another way of how I like to look at analysis. I'm a big fan of stability of business operations, because that often tells you that the company is on the right path. And if they have a near-term problem, which I love to see, but I love to find value, and the company has a problem and the share price drops, you want to say, is this a fixable problem or is this not a fixable problem? That is sort of the essence of value investing. Is this something that will soon pass, or is this something we have to worry about? And usually with those more stable companies that we'll see from a technical perspective, we'll learn that, no, this is a problem that they can deal with. It's not a big deal, and they'll keep on sailing. And hopefully we can get a nice bang for our investors.
What's really interesting that you talk about the relative strength, because I think that is one thing that just goes is ignored by many as being under the umbrella of technical analysis. I mean, of course, relative strength is part of technical analysis. We are analyzing the behavior of the market. So one particular stock outperforming the rest of the market, or one particular asset class outperforming another, whether it's gold versus stocks or oil versus stocks, or you made a great point how you're looking at energy stocks on a relative basis. So in other words, energy relative to the rest of the market overlaid over crude oil, and they look exactly the same, right? So, if you're in energy stocks, you need to see what crude oil is doing. I mean, that might be common sense to a lot of people, but that's just one example of many, many out there that maybe people are unfamiliar with. Maybe something like a copper versus gold ratio that looks a lot like US 10-year yields. There's a lot of really interesting correlations out there for sure. Anything else stand out?
Like a good example, what I always find fascinating is let's say you look at, I'm just making it up, but let's say you look at a graph of Lowe's and Home Depot, and the lines could look pretty different. Then you do a relative strength of both, just divided by the S&P 500, and suddenly the lines actually look far more similar. And it's sort of like it messes with your mind, but then you realize, okay, they're in the same business. They're dealing with the exact same business fundamentals. So the chart, by reading the chart, it tells you a fundamental reality. That's what I find fascinating. It's the interplay between these two worlds.
So let me ask you this. All right. So when you're going through when you're trying to figure out what stocks to include in your 25 stocks for 2020, let's just say. So you're going to do your fundamental analysis, right? And then where do technicals fall in that process? Is it all the way at the end? Is it somewhere in the middle? Is it at the beginning? Is it a combination of it?
I would say it's nearer to the beginning. Well, let me back up and describe sort of my system is, the buy list is it's 25 stocks in the ETF. I have what I call the watch list, and this is about 80 to 100 stocks that I consider fundamentally superior: strong ROE, strong dividends, low debt, strong margins, good place in their market, just good companies. And that's kind of the minor leagues for the buy list. Usually the buy list names will come from that. There's nothing official. I'll add some names, I'll delete some names. I like to have it around 80 names. That's, beyond that, I just can't follow it anymore. But these are companies, I can't talk about them in depth, but I know the bullet points on each of these. And then I like to see what has underperformed recently. So I know these are good stocks, and now I know, okay, if it's gone down, at least relative to the fundamentals, I'm using a technical perspective to tell me what's cheap on this list, what may be going for a transient bargain. So basically, how the easiest technical overlay is price, and the second is year-to-date performance. So right there, that tells me a lot. And so that's what I'll look at, marrying that with my watch list, and that's how I come up with names to add to each year's buy list.
I really appreciate that, Eddie, and that's from the bottom of my heart. I mean, that's one of the biggest reasons I wanted you to come on the podcast, to really explain how a fundamental guy uses the charts and uses technical analysis to really supplement that work. I see it every day. I mean, particularly from our institutional clients and a lot of the RIAs too. They're doing their fundamental work, and they just use our technical analysis as really like an overlay over the work that they're already doing, particularly the global macro stuff that they're just not doing because they're a little bit more bottoms up sort of approach kind of guys. So I've seen it. So I'm not surprised at all by what you're saying. So let's fast forward. I mean, here we are.
Can I just add something to this? And this will be right up your alley. But how often do you see a stock and it starts like breaking down, like for a few days, and then maybe a couple weeks, and it's kind of mysterious, like what's going on? And then the bad news comes out. Then they have the earnings warning, then they have a product recall or something like that. You see that too often to happen to say it's just a coincidence. Why does this happen? Does the market have some, weird ESP skill? I don't know, but it just seems to happen that, the charts are kind of smarter than we are, and they can pick up something, they can pick up a problem before we do. I always find that fascinating.
Well, let's remember, Well, let's
Yeah,
remember, Eddie, that what is a chart, right? It is a representation of the changes in equilibrium between supply and demand, and that includes inside information, right? We
exactly.
see it every single day. If you know something, you're gonna do something about it. How many people do we know are closely monitoring unusual options activity, right? Because if you have inside information, the best way for you to maximize that, granted, this is being done completely illegally, but the best way for you to maximize those profits, if you know that something is going to happen or something's going to not happen for that matter, you're going to do it in the derivatives market where your potential gain is exponentially greater than anything you can do in the equities market. So that is a very, very valuable tool. They are breaking the law by doing that, but we are not breaking the law by monitoring that,
And
right? We
noticing,
can
yeah.
see that. That's not our problem, right? That's their problem. That's the SEC's problem. But we can see that in price. I mean, how often do you see so-and-so company gets bought out and you look
All
back
the
a couple
time.
earlier and, the volume is through the roof. Somebody knew something.
I mean, yeah, we see that all the time. I mean, they call their mother-in-law, they do it through their account, but so it happens, way too often, and maybe it's too small that the SEC doesn't bother, or maybe they do get nailed for it. But yeah, it happens all the time.
And the old saying that news follows price, right? You're not going to get a headline XYZ up 20 basis points on, news of whatever, right? You're never going to get that. You're going to get crude oil up 5% or XYZ up 8% because of, whatever it is, right? News follows price. What about now? What are you thinking about the market? Here we are, April the 10th of 2019. Everybody out there, Eddie, from America all the way to Manila, they want to know, what does Eddy Elfenbein think about the market today? Any thoughts?
I've actually become I'm going contrarian, so I've become a little more optimistic. I think people really over freaked out about all this yield curve stuff. And yeah, it's important, but people were really, really going nuts about this. I get the feeling that the economy is probably accelerating out of Q1. I think this is a good moment right now for the economy and for the markets. I think there's a green shoot story in China that is fleshing itself out. Also, another good example, we're seeing the price of oil
Hold
is
on, Eddie. Hold on, Eddie. Can you rewind for us humble technicians who don't know what a green shoot is? Can you dumb it down for some of us?
I think that
Asking for a friend here. Asking
yeah,
for a friend.
the Chinese economy has been in a rough spot, and the government there has doing all it can to right itself. And I think now we're seeing some fruits of those labors, similar to what happened with the Federal Reserve in 2020 when sentiment was extremely low.
Hold on. What
But
do you mean
actually,
2020? Have you been to places
no,
that I
I'm
haven't
sorry,
been to yet?
I'm at 2010. I'm sorry, 2010.
Do you know something I don't know, Eddie?
So and then I saw like last week we had the best jobless claims report since the 1960s on Thursday. I mean, I think people got a little freaked out about the shutdown, and it looks like we're having Q1 earnings season is about to begin. We're going to probably see a small decline in earnings, so I think that kind of shook people up. So right now, I'm pretty optimistic, and I have to say, to talk my own book, I really like a lot of the stocks in CWS. So I think this is going to be. I'm looking for a strong. I was going to say second half of the year or final 3 quarters of 2019 looks pretty good.
All right. So on that note, if people are interested in learning more about the ETF or they want to buy the ETF, like how does one go about doing so?
Well, you should go to your broker or RIA and get shares of CWS. It's traded on used to be years ago Archipelago. Now it's NYSE Arca, so it trades shares of CWS. That's the ticker symbol. I recommend that investors, when they buy it, they place limit orders. I think that's the best way. It is a small ETF, and one of the myths that I have to shoot down is people are concerned that it's illiquid, and that is not how ETFs work. And so that's one of the battles I've been trying to fight. And people say, I love the idea, I love the ETF structure, but the trading volume is so thin. That's not important at all to an ETF. Basically, the approved purchasers, if there's an unbalance between the bid and ask, they can just instantly print new shares to satisfy demand. So that's really not a concern at all. Also, another thing that you can get at Yahoo Finance, or I think at the Morningstar site, you can see the indicative value. In other words, you can see the exact market price of the 25 stocks. You can see that at any time. So again, it's possible. I can't say you'll always get this, but it is possible that you can buy shares of CWS below its net asset value. Again, if you use limit orders and a little patience. So that's something else that I think is great about the ETF structure. And also the tax efficiency is something else which works for us. I can give you the ETF homepage, and that's it's a bit long, but I'll give you a shortcut. It's advisorshares.com/fund/CWS, or if you just Google CWS ETF, that's the page that comes up, and you get all the statistics, commentary from me, everything about the stocks and how to buy the fund, and it gives you transparency on CWS. So it's sort of anything you want to know. Also, we have a great customer service team, so they can answer any questions you have.
And everybody listening, make sure to follow Eddy on Twitter at Eddy Elfenbein for his snarky comments and market commentary, right?
Yep. Yeah, I love being on Twitter. I love interacting with people there.
Listen, man, I really appreciate you doing this. I wanted to pick your brain for a while now, so I'm glad you're here, and we'll catch up soon on the East Coast.
Absolutely.
All right, brother.
Thanks a lot.
Thank you for listening to the All-Star Charts podcast with JC Peretz on Technical Analysis Radio. To see all of the charts mentioned on today's show, please visit allstarcharts.com/podcast.